Hello guys. So I'm making this video to show you how you can milk boom and crash indices. So this strategy is not difficult to understand. It's a simple strategy, and as you know, I'm a price action trader. And what that means is I make use of candlestick patterns and chart patterns and the likes in my analysis of the market. So this is what guides my trading decisions, and this is how I generate signals. So this video, I don't know what I will call it yet. Maybe I'll call it the 15-minute strategy for milking boom and crash indices, or maybe not, but let's see. So if you are familiar with price action strategy, then you should know that the first thing you need to do before you take any trade, before you place any order at all, you first need to know the trend. You need to understand the trend. You need to define the trend. So this is a mistake that many amateur traders make. You are looking for spike, okay, but do you know the trend? You need to know the trend. If you know the trend, then this will help you, better be able to know what to do. For example, in boom indices like boom 500. So before I try to cash spikes at all, what I do is I try to define the trend. And there are two types of trends. We have the uptrend and the downtrend. So on boom, if you are trying to cash spikes, then the best time to cash spike is when it's on an uptrend, when the market is on an uptrend, when the market is bullish. And how do you check? You can't define the trend on the lower time frames. You need to go to the higher time frames to define the trend. And when I mean the higher time frames, I don't mean go to 15 minutes. 15 minutes won't show you the bigger picture. I mean, you should go to the 1 hour or the 4 hours. In fact, you can go to the daily charts to help you determine the trend of the market. So here this is okay, let me change to boom 500. So this is boom 500. Let's check the 4-hour chart. Remember, we're trying to determine the trend. Now, what do you see here? What do you see here? Okay, let me zoom out because I forgot to tell you guys. When you are trying to define the trend, you need to zoom out. You need to zoom out so you can see the bigger picture. So I'll try to zoom out like this. So as you can see, I've zoomed out. So what do you see? Is this a downtrend or an uptrend? I will pause for you to answer that question. Is this a downtrend or an uptrend? Alright, clearly, as you can see, it's a downtrend. You can see the market has been trending downwards. It has been trending downwards. It has been making a series of lower highs and lower lows, lower highs and lower lows, lower highs and lower lows. So this tells you that the trend of this market, the trend of boom 500 at this point, is a downtrend. So now that I've been able to determine that, okay, this is a downtrend, right? This is a downtrend. I know trying to cash, a spike, on boom 500, a spike is an uptrend. Basically, it's an uptrend because the price booms upwards. So I won't try to, I won't be trying to cash spikes on this market because basically it's a downtrend. on another video, I might show you how to cash spike on this type of market. On this type of market, there is a way you can cash spikes basically, but I won't be showing you that on this video. I'll be doing that on the next video. So let's check another. So we've already defined the trend, right? This is a downtrend. So basically you shouldn't really be looking for buying opportunities in this market. You shouldn't be trading spikes on this market, because you might lose money if you try to find spike on this market, because the general direction of the market is a downtrend. And I know many of you would have heard this saying. They say the trend is your friend, right? Trend is your friend. Trade with the trend. So I guarantee you, if you follow this advice, the trend is your friend, trade with the trend, then you won't lose. Sure, you might lose, but you discover that you will be much more profitable than before. So now that we have defined the trend on this market, I know to avoid boom 500 at this point, because the opportunities of cashing spike is low. It won't be profitable, because when you are trying to cash spike, you are looking for good setups that will guarantee you maximum profit. And this type of market won't guarantee us maximum profits, because basically the trend of the market is downwards. It's bearish. So there is no point trying to cash a boom or trying to cash a spike on this indices. Now the second thing you need to do, as a trader trying to cash spike, you need to define your levels. You need to define your area of support and resistance. That's what I mean by levels, by defining your levels. If you don't know what support and resistance is, I'll try and make a video on that. I'll drop a video on that. Support and resistance is basically an area where you expect traders, that is buyers or sellers, to come in, where you expect them to place their orders. So how do I define my area of support and resistance? So here now, I go on my higher time frame and I try to zoom out. So I scroll backwards to help me with the obvious areas. So looking at this, I can say this point is an area on the chart where I expect price to move significantly, as you can see. So I've marked it out now, right? So here is our support, because you expect that when price comes into this area, you expect market to be rejected upwards. So the area that I've highlighted below is what you call support, and you expect buyers to take price up, to push price up when our market reaches this point. Another area of importance on the chart right now, looking at it with my naked eye, is this. You can see, what do you see at this point? You can see there were several rejections at this point, right? There was one here, there was another, there was a couple of rejections in this area on the chart, which shows you that anytime our price got here, maybe buyers were buying and taking price up, and when it got here, you can see sellers came in and pushed price back down. They pushed price back down again. At this point, price went up and got into this area again. And what happened? Sellers took price down. So basically, this area on the chart is called your resistance. Your resistance is an area on your chart where you expect sellers to come in to drive price back down. You expect sellers to take charge of the market from the buyers. So you can see a couple of times, several times, when market got to that to the area, sellers were able to drop our price back down. So that is what you call defining your area. As you can see, it's very easy, although there are other ways for you to define your area of support and resistance. So let me take this out. Okay, let me try and draw trend lines. So you can use trend lines again to help you determine your area of support and resistance. Now let me try and draw a trend line. See, here is an area on the chart. You can see that every time price touched this line, this black line, what happened? Price dropped down. See, there was an instance here when price touched our trend line. What happened? You see, sellers dropped price back down, right? Sellers dropped the price back down. Again here, there was another touch on the trend line. What happened? Sellers drove price back down. So you can see. So this area on the chart is called the resistance. Resistance is where is an area on your chart where you expect sellers to normally place their trade, to normally come into the market and make a move. So let me take this out. I hope you understand. I hope you're following me. So let me try and identify support for you using my trend line. Alright, here's an instance. So I can draw it like this. Okay, yeah. So what do you see here? You can see every time there was a touch on the trend line, by the price touched the trend line, what happened? Price went up, right? Again here, price went up. Again here, when price touched the trend line, what happened? The buyers came in and took price up. As you can see, it kept on repeating itself. So it's not that hard, right? It's not that hard. Let's see one more example. So if you want to draw your trend line using if you want to identify or define your area of support and resistance using trend lines, you need to draw from left to right like this. So again here, what do you see at this point? We touched the trend line, right? What happened? Buyers took price up. Again here, it touched trend line, right? Buyers took price up. Although we could count this as a touch, because I said it's an area, so it's not a line, it's an area on the chart. So we can count this as a touch as well. So price went up again, right? Again here, price went up, right? So that's how you define your area of support and resistance. So I hope you get it right. Alright, so as you can see, this is how you should trade. This is how you should trade as a price action trader. I know I haven't taught you the 15-minute strategy yet, but I will be making that video I'll be dropping that video next, because I see I've talked a lot on this video, and if I try to put in another strategy in this same video, it might get a little bit boring. So I'll try and make another video on the 15-minute strategy to make our boom and crash. So basically what we've talked about on this video is how you can trade as a price action trader. I told you that before you place any trade at all, you need to first identify your trend. You need to first define the trend. And I know this is one mistake a lot of new traders make. They just go on the 1 minute time frame, and they just want a cash spike. They want a cash spike without first identifying, without first understanding the structure of the market. I mean, that's not the way to trade. You need to first go on your higher time frames, try to understand what is happening. This will guide you on what to do. So if you are able to identify the market structure, you are able to define your trend. Okay, is it an uptrend? Is it a downtrend? Then this will help you to know whether it is safe for you, to buy boom or to sell crash. I hope I'm making sense, guys. I also told you on this video that the next thing you need to look out for, the second thing you need to look out for while determining your trend, is to go on the higher time frames for you to see the bigger picture. So you can go on your 4-hour or your 1 hour or even the daily charts to help you see the bigger picture. What is happening? Is it a blue bar or a red bar? Has the trend been a downtrend, or is the market trending upwards? So this will help you. If you see the market is trending upwards, then what you should be looking for is buying opportunities. And if you see the market trending downwards, if it's a downtrend, then what you should be looking out for is selling opportunities. So, and also I've shown you how to identify your supports and resistance levels on the charts using various methods. I showed you how to do that with your triangles, with your rectangles, and your trend lines. So I'll be ending the video here. If you have any question, feel free to chat me up. So expect the video on the 15-minute strategy. Thank you for watching.